The European Union has fined Apple Incorporated and Meta platforms. Incorporated a combined €700 million, or about $798 million, under the new Digital Markets Act. This marks the first penalties under the law, which is aimed at curbing big tech's market power. Apple received a €500 million fine for restricting developers from directing users to external payment options outside its App Store. Meta was fined €200 million over its ad-free subscription models on Instagram and Facebook, which European Union regulators say violate user consent standards. These fines are smaller than past penalties under traditional European Union antitrust laws, reflecting a possible effort to avoid escalating tensions with the United States, especially following warnings from former President Donald Trump, who criticized European Union tech rules as unfair trade barriers. EU antitrust chief Teresa Ribera said the companies have fallen short of the EU's expectations and must comply with the decision within 60 days or face further penalties. Apple also received a warning that its revised fee structure for developers still doesn't meet DMA standards. In response, Apple called the ruling discriminatory and vowed to appeal. Meta accused the EU of unfairly targeting US firms while allowing others to operate under different rules. Despite the fines, Apple secured a win with the closure of an EU probe into its browser practices. Meanwhile, the EU dropped its plan to target Facebook Marketplace under the DMA, though Meta still faces a separate €798 million fine under standard antitrust law. The EU has previously imposed major penalties on big tech, including more than $8 billion against Google and €13 billion in back taxes from Apple.